Hello, guys. We all know that something is going to trigger the next major financial crisis like 2008. And once it gets that trigger, then it's going to start to spiral out of control. Everything's going to start to come unglued, so to speak, because everything's ready to come unglued. It's all being held together with duct tape and little pieces of twine and bubble gum. That's what it's all being held together with. So it's not hard for it to all fall apart. Uh, in starting the show, we're going to get right into this. So stay tuned, guys. Hello, welcome back to the show. Now, we're going to get started. We're going to open up the charts right here. And the first thing we're going to talk about is the emerging markets. The emerging markets are having problems. This article in Business, it says, will there be a new financial crisis? Emerging markets are spiraling into turmoil. It says that this could ripple out into the global financial system. These emerging market problems that they're having right now. They're having them in places like Argentina, Turkey, and you know who hasn't really entered into all of this yet? Is Italy and Spain and Portugal and these other countries, these European pigs countries. Right now in trading this morning, we'll go into the Asian markets real quick and take a look. This is a reflection of the emerging market crisis that's developing. What we can see is a sea of red in the Asian markets today. It doesn't look good in the Asian market overview. So the whole world's economy now is all interconnected. And this trade war doesn't have any apparent, there's no apparent signs of it actually backing off and things actually getting better suddenly. And the world is starting to realize that, but there's other forces at play that could really have an effect on triggering things. See, these are deflationary pressures, and this pushes the dollar up higher. And as the dollar goes up higher, gold and silver are spiraling down out of control, lower and lower. It's like a fire sale, for crying out loud. There's big money out there. They've printed $21 trillion worth of excess liquidity that's floating around in the system. This money that's unaccounted for, if even one little tiny fraction of it decides to move into the silver or gold market, it could destroy the silver market. The silver market right now is like, how would I describe it? It's just like something that's extremely brittle and easy to break. You breathe on it, you'd break it. The silver market. That's how it is. And it's why is it because of supply. The supply is mostly all coming from the mines. And that's what's supplying the world with fresh silver that's available for sale, like when you go to a place like Atmex or whatever. Now, for years, people have been buying silver and putting it away, but they're not going to sell it at these prices. Like, take J.P. Morgan alone. He's one of the biggest hoarders. He's got over 140 million ounces. But he's paid more than the price is right now. He's not going to sell. So it might as well be like that silver doesn't even exist. The only silver that really exists is the silver that's available for sale, and that's coming from the mines, mining supply. And that has constraints on it by industry. And industry's basically got all that sold already. So there's a very tight supply that's coming in that's been supplying these stores where you buy silver and stuff. And they've been keeping up with a little bit of a deficit every year, but they've been keeping up. If sentiment turns because the price drops too low suddenly, it could just end that market, and that could help spiral the world out of control. It wouldn't take much to spiral the world out of control at this point. So let's move on and let's get right into the markets, the meat of the markets. Now, what's happening with cryptocurrency this morning? Cryptocurrency is suffering some big losses. We got a waterfall here. This is a waterfall, and it's had two legs down. Bang, bang. It's down to $6,400. market sentiment is starting to turn on cryptocurrency right now as we speak. I know you go on YouTube and you see a lot of these guys are hot on, but the thing is I think we're going to suffer through this with cryptocurrencies as the infrastructure behind cryptocurrencies builds out under the surface. At the same time, market sentiment's turning sour. So what this is going to mean is they're doing a lot of work for you. Basically, they're building this infrastructure out while market sentiment turns sour and you can buy really cheap, and you're going to get the advantage of all this infrastructure build if you can get these coins cheap enough. Cheap enough is the thing that we're looking for. We're looking to buy them cheap. And these waterfall events, if they continue, the price going lower and lower, it's making it cheaper and cheaper. And this is a good thing, for us to accumulate, because later down the road, maybe a couple years out from now, this is going to be the next big thing. This is the next big thing. It's like in wrestling when they got the next big thing coming in. And they know he's a young man. He weighs, I don't know, 500 pounds, and he's strong as an ox, and he's like 7'8" tall, and he's all muscle. The next big thing. That's what this is. This is the next big thing, and he's got a long career ahead of him, and that's what this, So this is where you want to buy in, but we want it cheap. We want it cheap. So that's what's going on. So let's take a look at the cryptocurrency market capitalizations. Man, look at this. They're all getting cheaper. Bag holders out there, if you're into cryptocurrency, you want more of them, just be patient. Be patient. Market sentiment's turning really sour right now. We might get some real bargains in this stuff. Silver prices, the same deal. I mean, accumulate, guy. I mean, this is like manna from heaven for stackers if you're going to get in there and look at these prices. And they could actually go lower during this deflationary event, but we all know where this is going to go in the end. We all know where this is going to go in the end, and that's the moon. That's where it's going to go in the end. It's the end of the game. You've got to keep your eye on the ball and stay with it right till the end. It's the end game. So don't focus so much on the short-term negative market sentiments. That's when they'll be buying in. They'll be buying in when nobody else wants the stuff. That's a great time to buy in. Let's take a look at the Dow Jones Industrial Average. Now, this is a totally different market right here. It's over 26,000. It's been pumped up to the moon, and it's got, if market sentiment here turns, and I mean this could be the real waterfall. Because there's nothing under it to support it, This is the way with this right now. There's nothing under it to support it. What are we on here? 2 year? Let's go to the 1 year. We get a better look. There's nothing under this to support it. Well, look at these falling volumes, especially out for the last few months, July, August, and September. Look at the small trading volumes. What I mean that there's nothing under it to support it is if this market starts to fall big, how many buyers do you got that's going to jump in there and grab the falling blade? I mean, seriously. Okay, so now we have sweet light crude oil. And remember how I said it'd go up and touch $70 and then it's going to drop back? Well, here we have the drop back, and it's going between 65 and 70. They are controlling this market just like they're controlling the gold and silver market. Right on. That's what they're doing. That's what they're doing with the oil price. Now, bonds and rates. I'll take a look here today, and what we see is bond yields falling. Are we in bizarro land? Quite seriously, are we in bizarro land? Bond yields falling, but it's flattening the yield curve. And from what I gather, I think the Fed's getting ready to punch it up 0.25% on the short end of the curve. And we're already, all of them are practically in the twos, except for the 30 years, just barely in the threes, but they're all in the twos. We're all within 100 basis points of each other, and they're going to raise the short end 25 basis points. That's really going to help flatten the yield curve out on this next interest rate hike. Let's take a look at the U.S. dollar index today. 95.09 on the U.S. dollar index. It's been going along fairly level. Let's take a look at the last 5 days, and we can see it hasn't really been going too much of anywhere. Just fairly flat for the last few days, in around just over 95%. Okay, this has been your market report for this Thursday. Thank you guys for listening. Like and subscribe, and we will catch you in the next show, Friday. Bye-bye, guys.